Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is October 4. In America, we call it 10-4, like 10. You remember the CB radios, 10-4, good buddy. What's important about 10-4? Well, it's my mother's birthday. Happy birthday, Mom. I love you. Anyway, let's get into the markets here today. We had the Reserve Bank of Australia raise rates by less than the expected 50 basis point, only 25 basis point rise there. A central bank pivot. The Reserve Bank of New Zealand announces their interest rate decision tomorrow. Will they pivot too? And will this lead ultimately to a pivot in the Fed a little bit earlier than expectations? We will see, and that is helping to drive some of the markets and trading here today. So let's get on with it. U.S. stocks are up sharply again. The S&P index is up 56 points. The Nasdaq index is up 213 points. And the Dow Industrial Average is up 371 points. That comes after gains of 2.25% or more yesterday. So back-to-back gains for the U.S. stock market. We also seen interest rates move down sharply over the last less than a week. The 10-year yield reached 4.01% last week. It's currently trading at 3.6%. So interest rates are coming down, and that may be helping the U.S. dollar move a little bit lower. It's actually mixed here today. Why? Because the Reserve Bank of Australia came in and they raised rates by only 25 basis points. That led to a decline in the Aussie versus U.S. dollar initially, because they were expecting 50 basis points, or most were. The price moved below its 100-hour moving average. This is the hourly chart of that pair, and that was more bearish. But then we saw this snapback rally, and when we moved back above the 200-hour moving average here, you may recall yesterday we moved above the 200-hour moving average for the first time since back here on September 13th, but it could not be sustained through the decision. When we moved back above that, we saw the squeeze to the upside, and the price moved above this swing area from last week. This is our swing high from a week ago Monday, and then swing high from Wednesday. On Friday, the price couldn't get into that swing area, so we moved above that level, and the price should have gone higher toward the 38.2% retracement, but no, it couldn't get there. It reversed itself, and we saw the price reverse all the way back to the downside, breaking below our 200-hour moving average or 100-hour moving average. And currently we're trading just below the 100. Let's cancel that. Just below the 100-hour moving average at 0.64736. Guess what? If the buyers are to take back some control, we're going to need to get above that 100-hour moving average and the 200-hour moving average. Interesting is that yesterday's rally was seemed to be spurred on by some risk-on sentiment. Of course, it may have also been short covering into the interest rate decision, but we are seeing the U.S. stocks and the European stocks up smartly today, and we're not getting that risk-on sentiment in the Aussie versus U.S. dollar, obviously because of the interest rate decision by the Reserve Bank of Australia. But I guess if there's a silver lining is that the Aussie versus U.S. dollar is not down near the cycle lows for the year, down here or here. In fact, we're sort of in the middle of that this range right here. But so that's good news, perhaps for the pair, that the central bank pivot may lead to a rally in the Aussie versus U.S. dollar for a change versus the decline, just because we might see stronger growth or more confidence out of that country. Homeowners are breathing a sigh of relief as the interest rate only went up by 25 basis points versus 50. Things like that could spur on some short covering in the Aussie versus U.S. dollar, but we need to get above those moving averages. Okay, let's take a look at the Euro versus U.S. dollar. And I'll look at this from a 4-hour chart. What we're seeing in this pair is a continuation of the move to the upside here, which yesterday saw the price move above the topside trend line here briefly and then rotate back to the downside. But we held the 38.2% retracement of this move to the downside. The 38 comes in at 0.9788. And the price decline here on that 4-hour chart came right down to that level and started its rotation back to the upside and trading here today. We are currently moving to new session highs as I speak and trying to get above the 200-bar moving average on the 4-hour chart. That was our next target. Also, the 61.8% retracement at 99.44, and this swing area through here coming just above that at 0.9951. What we did do is get above this swing area through here over the in trading here today, which took the price, which confined the pair. This is again the 4-hour chart, so this is a couple weeks of trading through here. We moved above it here, and then we failed on that move above, and we started this rotation trend move to the downside here. So getting back into that box is more positive. Also more positive here is, from a technical perspective, is getting above the 50% retracement of this move to the downside through here. And finally, this blue line right here represents the 100 bar moving average, and getting above that. So guess what? This level right here at 0.98662 is now our risk level for buyers. As long as the price remains above that level, it's more bullish. If the price moves below that level, traders will be disappointed on the break here, the move to the 200 and little break above that level, and they would probably give up the bullish bias if we started to move back below that level. So keep these levels in mind for the euro versus US dollar. Let's take a look at the dollar versus yen, and the story remains the same for this currency pair, with the resistance against the 145-ish type level right through here. Highs here. We did break above it through here, and we did break above it yesterday as well. But recall the central bank came in and forced the market to the downside here. So there is some apprehension at the 145 level. If we start to trade more comfortably above that level, traders are taking it into their own hands, hoping that the central bank, the Bank of Japan, doesn't come in. I'm earmarking here the 200-hour moving average here. Note in trading last week, the price moved down to the 200-hour moving average, started to move back to the upside through here. So, this is the hourly chart. So this is yesterday. We saw the price move down to the 200-hour moving average and bounce off of that level. So that's a positive for this currency pair. The 100-hour moving average is up close to a support level, as is this risk level, this swing area, the low of the swing area. So get below the 60 level, down to the 55 to 60 level here in the dollar versus yen, and we could see a rotation back to the downside for that currency pair. Let's take a look at the sterling versus US dollar, and this currency pair is also moving to the upside here, and this is the 4-hour chart of it, and we moved, like similar to the euro, we moved above the 100 bar moving average of this chart, and we have the 200 bar up ahead. That level comes in at 1.1455. The 100 comes in at 1.12337. As long as the price, so we're trading in between the goalposts, as I like to say. The price hasn't traded above the 200 bar moving average on the 4-hour chart since way back here. That date is all the way back to August 18th. So getting above that level would be more bullish here for the sterling versus US dollar. Again, the 4-hour chart here. Let's take a look at the daily chart in this currency pair. And what we do have on the top side is some resistance here off of the daily chart in between the 114.04 to 114.595 level. We have swing low, swing low, swing low, swing low, break below that level, and then use the swing areas as a resistance right here. So the price moved within that area and then backed off. So there is some apprehension in this area right here. Also apprehension against the 200 bar moving average on the 4-hour chart on the top side. So there you have it. A look at some of the major currency pairs. Good fortune with your trading here today. My name is Greg Michaelowski. Bye-bye now.